Welcome to Fundu Money, your 24 into 7 buddy for all your money matters. Tax savings investment season is all set to come to an end, and you're wondering what are the basic things that you need to do, more things that you need to do. And even in this 11th hour, you might just get an impulse to invest for your family's future, which is fair enough. But there are a lot of people who want to, or who end up investing in the name of the children, tax saving investments. Should they be doing that? Does that make sense? Should you be doing it in your name? Even if it is these investments are for your children's future. A lot of people do tax saving investments with an eye towards the children's future. To answer these questions, luckily we have with us one of the leading financial experts of our country, Swami Saran Sharma, who in a very little while will tell us, give us the answers to these very important questions. So hang around. Welcome to Fundamental Swami. Swami, a lot of people do these tax saving investments in the name of their children because they think that they're earmarking it for their children's future. Do they need to do it that way? Or it's just a psychological thing that, because it's in the name of the children, they know, they're sort of bucketing it. What are the other issues that might come? Because one day these children are going to grow up and they're going to become majors. Are there implications? So at this 11th hour, if they're suddenly making an investment in the name of their children or thinking about it, what are the things they should be keeping in mind?
Yeah, very interesting question. Then, actually, when you save in the name of your children, everything which is construed as a transfer of income from your side to the children is not acceptable by the income tax, because they want to tax everything in your name, because it is primarily your income. But in case of tax savings, which are essentially long-term investments, so by the time they mature, children will also be maybe adults. Supposing while investing, I think one should keep this in mind, that at the time of maturity, if the children are they will become adults, proceeds will become ultimately tax-free in case it is provided by the scheme itself. Supposing if you are investing the name of your child in PPF, which is an exempt scheme, which is exempt at the time of investment, interest earned on it is also exempt, and at the maturity, all proceeds are also exempt. So, and by that time, your child is also adult, so there will be no taxation implication there. Some schemes which, like, say, if it is a FDR, 5 years FDR in the name of your child. So at this stage, you may get a deduction, but all interest, everything, when it matures, will have to be taxed in your income only.
Okay.
Then it transfers to your child's income, because taxation will have to be with you, and then you can gift any amount to your child. That is a different matter.
So one thing is coming out clearly. Much depends on what earnings that investment that you're making in the name of the child is. That earnings, the treatment, taxability of that treatment. If it's an interest, it'll get added to your income, and you pay more tax. So that's number one. If it matures when your child becomes a major, then that your child would then at that point getting taxed as a separate taxable entity, so your child will be paying the tax. And if there are no returns in between, and it's a market linked sort of a thing, equity kind of a thing, which has got an equity component, 65% or more, then you'll get, there's no tax in the interim. Even at the maturity, there's no tax. So one has to be very careful about this, even at this stage, to figure out whether you need to do it or not. Just because you're doing it in the name of the child doesn't mean that you're escaping the tax man. He's much smarter than all of us. So The other most important thing, which I think Swami would agree, is when you are investing in the name of the child and the maturity is happening, when the child is becoming major, the money goes to that individual. So your child will be an adult. The child technically and legally is empowered to take decisions on that money. So you need to remember that as well. So we hope these are some of the things that you would keep in mind if you're thinking of investing in your child's name. What are the other things that we missed out? Do point it out to us on the in the comment section. Please use the closed caption and the subtitles to check out the highlights of this discussion. We are doing it through the Google Hangouts, so there are always internet slippages. Um, Check out the description section. There'll be additional information. There could be additional links which you might find useful. Please stay connected with us on all leading social media platforms, and of course visit our website www.fundomoney.com.